Let's just get the labels in first. This is an extension into wave 3. Of course, the labels are not really updated, but it would mean that at that neckline here is some kind of a higher degree wave 3. We know it's an extension because of the continued positive momentum on the 1 hour and on the 4 hours. Okay, so what this means is that you always want to buy into the growth segment of the last wave on the 15 minutes, of the last growth wave on the 15 minutes. There's a break above inverted double heads. Going to be buying upfront at these levels, 50% and 38.2%, top of a wave 1. Okay, so this is just doing a similar correction to what we've been seeing on the United States dollar against the yen. This current correction should bounce at that neckline. All right, neckline comes in at 156. The correction has already done an A, B, and a C. It is possible that this is just going to be a higher degree A, then there's going to be a higher degree B, will take us to the neckline. Sorry, will take us to the market top, maybe a bit higher, market top at 157.47. And then we're going to have another C, and at that point we're seeing inverted heads and shoulders. This is how cycle works. We have a neckline up here, and the market goes off to 160. So just like what we've been saying with what we've been doing with the United States dollar against the yen, we want to use every possibility in the trend. All right, and be very efficient and pragmatic. If this is really a C, there's a 1, 2, and a 3, 4, and a 5, then we just need 2 projections. Let's take these strips off. Even if this was just a high degree A and it's going to get a B, then you're going to do the same market top at 157.4, or 127.2 would still be high degree B, 157.6. Before you do another C, and you're seeing that formation which is inverted head and shoulders, and we're going to 160 and 161. I believe we already longed at these dashed green lines yesterday. We were long at 156.85 or 156.9, added at 156.65 or 156.7. Excellent entries. Hopefully we would hold. We understand level management, that we will begin to go out of one of these positions if we break below 155.80. So it's just 100 points risk. So if we're already long, we hold. If we take profits, of course, close out at the market top, 157.4. Remember, we can still consider that this is going to be, the move has been very strong and very fast. It must consolidate. So if this was a 4, a deeper correction, you're going to have an A and a B and then a C. We're not really bothered with the C right now. We know that A should be about finished. Maybe it will still fall back a bit lower to this. We would have rejected at level 1 here. You can see a 1, 2. All of this is 3 instead of 5, and this would actually run down to this level. This is 3 here. This is 4. You always have to note these internal rejection points and necklines. So this is a 1-4 relationship. It will mean you can still get a wave 5, 156.4. All right, we could also do projections for that wave 5, 156.43, 156.36 are buys. All right, so I would consider, I don't want to lose out on the position or not be engaged because this is really moving. There's a bounce, a valid bounce. I will check it, of course, on the 5 minutes and the 1 minute chart. If this is a valid bounce, I'm not already in the market, I buy. I would consider to buy. I go out at 157.4, 157.6. This is a wave B. There's going to be another wave C. I know there is some kind of a neckline here. Probably wave C is going to just project to a shoulder below the neckline, and we're moving higher. We're seeing a wedge. We're going to break out of the wedge. The market, of course, is a valid buy. All right. We would just want to be efficient, so we will trade by taking profits consistently at 127.2% projections. All right, we are looking at retesting that neckline. It's going to be 161 is showing here, and showing here 161, and of course 160. We have 160 on the 4-hour charts. Forget now about we're no longer going to be trading this rejection at overbought because of the positive momentum on the 4-hour chart. This is what you're seeing on the 4-hour chart. We discussed this yesterday. Momentum is consistent above overbought. Very positive momentum on the 1-hour. Therefore, definitely momentum is going to remain consistent above overbought. There isn't going to be a shoulder at this point. There's going to be another head. Another head will take you 127.2% over the old head. 127.2% over the old head actually takes you to 160 and 161. You're looking here at the breakout high for the month is 161. So if you're going to be taking this to the end, trading it to the end of the month, now is expected to be an excellent entry because we have broken above level 3. This is a very important, we think it's an important level. Just like with oil, this is a level 3. There's an internal one here. We're broken above. Remember, we are having a stop at 156. It's very indicative that if whatever has been broken above as a resistance becomes a support. You can get spikes back into 156.56, but you're not going to break it. At the most, it's going to be 156.55.6. This is a level 1. This is now level 3 and extending on very strong momentum. So whatever we're going to be buying, we're already buying at 156.80s. We can now understand is just having to stop 100 and 120 points away. The potential, of course, for longer term monthly traders and for intra-week traders. Intra-week traders